The first scenario we're going to look at is Hazel. Okay. Hazel, pictured here, pictured there, pictured there. She is a freelance software developer. Okay. And on an annual basis, she makes $195,000 in revenue. Now, it's not $195,000 in take-home pay. She obviously has certain costs that go with it, but she's bringing in $195,000 in revenue and billings from her clients. Now, Hazel benefited from a class. This is a fictional character, but Hazel benefited from a class that she took with Equip, and so she really feels empowered to do a lot of the work herself. And because Hazel's aspirations are, she just wants to be a freelance software developer. She doesn't want to do, grow crazy large. The reason why she went into business for herself is because she loves the flexibility and she loves being her own boss. And that just fits her needs and where she's going. So she's not looking to grow like crazy. She's thinking to herself, you know what? I'm okay with saving a little bit of money and just doing the work myself. I've got a little extra capacity. So shoot, I'm going to do this myself. So guess what she does? She writes her own financial story. Again, because she worked with Equip and now she understands how to do that. Now, just as a quick refresher, or if you hadn't noticed, anything that's in red that I'm highlighting now in red, that's the DIY. These people have chosen DIY. If it's in like charcoal gray, it's because they chose to outsource it. So just as a quick heads up on that. So Hazel is writing her own financial story for all three audiences. She's doing that also for government. And then for management and investors, she's been taught enough to know what she should be keeping her eyes out for, her eyes peeled for reviewing and reporting to those two categories. Really, she's her own investor, so it's not super complex. She doesn't really need to hire a CFO or anything like that to deal with that. So she's doing the work herself. She has, however, decided she wants to hire a tax professional, somebody to do the reporting to the government for her income tax, okay? You'll notice I have yet to tell you who is doing the review for the government piece of the accounting. This is a common misconception, and if you are really careful, you could read through your agreement with your tax accountant and discover this, but technically, most contracts that you engage with a tax accountant, a tax preparer, somebody like that, they will explicitly tell you they are not validating your financials for accuracy. They have a responsibility. If anything looks weird, they're going to bring it to your attention. But you'd be surprised at how many things fly right under the radar of a tax accountant because it's not their job to review the financials for you unless you specifically engage them to do so. So be very mindful of this when you go and make decisions for yourself. Don't assume your tax accountant is going to review your taxes for you because they will not. I have a story that comes to my mind in particular where somebody who is running their own books actually double counted a lot of their revenue. And as a result, they overpaid a little bit in taxes because their tax accountant that wasn't their job to review to make sure that things were right. They just assume if you have given me your books, I'm going to assume that that's right. So just know it's on you, unless you explicitly say otherwise, it's on you to review to make sure your numbers are good. Fortunately, Hazel knows how to review her numbers because she worked with Equip, so she feels empowered to do that for herself. So she's outsourcing government reporting, but that's it from the accounting perspective. Finance operations, she doesn't have a ton of clients, so she doesn't need to worry too much about the billing and collections that goes with it. There's just a couple people, right? And so when she thinks about this, she's like, I'm not going to hire a bookkeeper. I'm not going to hire somebody specialized to do this for me. I'm just going to do it myself. Invoicing, super easy. Payables, she's not getting invoices. I think maybe she got one invoice last year. Most of the time, her payables function is swiping a credit card. So she doesn't need to hire somebody to deal with getting those invoices and making sure they're paid. She'll take care of that herself. And payroll, yes, she's an S Corp, but she has engaged with a really great platform called Gusto. There's a number of other great platforms that are out there, but she pays a monthly fee, and it's a great platform that empowers her to be able to do the payroll stuff herself. And they take care of things like the payroll tax filings and all this kind of things. So she's using a service. She's not paying somebody to do it. She's paying for like a platform service. Okay. But we'd consider that to be kind of a DIY option. And as a result of all that you see off to the right-hand side here, she pays about $250 a month. Very affordable, right? 1.5% of her annual revenues are being spent now on her finance function. But you can understand why she spends so little is because she is responsible for so much. Now, in the next example, we're going to look at something like middle of the road-ish.